Good morning, traders. It's Tuesday, March the 22nd. Taking a look at the charts, the stock market is unfolding pretty much as we expected. Earlier in February, we saw this bottom get formed with the cycles doing a double bottom formation, and then we had the later half around March 28th. Back here, we saw the forecasting cycle analysis was telling us around March 28th we start to see the stock market top, and of course we're only a week away from that. Everything is starting to top out just as we planned. Cycles continue to unfold more or less the same way we saw about a month and a half ago. And we're getting to that point here where we're getting right into deep resistance here, right through the heart of this consolidation, this previous major topping formation. The overall trend is down with lower highs, lower lows, and market participants in the masses are becoming more and more bullish on stocks. They've been slowly moving out of bonds, and that's the sign that we're going to start to get into a topping phase. And any day we could start to get some really strong volatility, just like we saw over here. We start to see massive kind of pullbacks and bounces. Things are going to get choppy and tough to trade looking forward a few weeks. So here is the current daily chart of the SP 500. We're seeing stocks trade down about 0.4% this morning. Money is flowing into the safe havens like bonds and gold and silver. Nothing significant, about 0.5% up for bonds and metals. But we're going to continue to chop around. If we take a look at the cycle analysis for the SP 500, so here's the same chart, and you can see here, if you haven't followed this, the pink line here is the most significant. This is the intermediate trend. There's a dark gray line below it. You can see how it's got these, it shows a little bit of consolidations and dips in the market. And the blue line is a cluster of smaller moving or cycle analysis telling us when we should see some surges and pauses and pullbacks. And when they're all in line together, when you get like a cluster here at the bottom, where all three of them kind of bottom and you've got a big long cycle to the upside, very similar to over here, you can see significant moves to the upside. Now overall we are getting into the point, the time in the market here where we're going to start to have a cluster of tops get put in place. We're going to have all three clusters of multiple cycle analysis all topping out over here in the next about a week and a half or so. But really we're going to start to struggle pretty much in the next 1 to 2 days. You can see we're going to have a short-term cycle turning down, a cluster of longer-term cycles turning down. We're still going to have the primary cycle moving up, but you can see this impulse wave here with this the shorter term cycles. We're going to start to get into probably a strong correction in the market, see it pull back. And if you take a look at the gray line here, it's tough to see, it's pretty dark, but we've got a shoulder, a head, and another little pause right here, which would be another shoulder. And more or less it's going to draw a little bit of a neckline here. We're probably going to form some type of head and shoulders formation on the chart, something like that, or possibly just lower highs and lower lows, a little bit of a topping phase, and then we'll probably see it break down, and we're going to see stocks continue to sell off in a big way. So we're getting very, very close. Again, this cycle analysis changes every week as I update the cycles, and this is kind of where we're at. Now, if we go back and take a look at, let's go take a look at bonds real quick. Here's the TLT. You can see a nice run up, nice tight consolidation. Looks as though bond is kind of primed and ready for an explosive move to the upside. We've been talking about this for a while, that we're looking for a little bit more of a pullback for it to settle down into these kind of big gaps down here, this topping candle over here. And we really want to see the average market participant get extra bullish in the stock market. They'll pile in the stocks, and we'll see bonds continue to pull back and kind of have a sharp drop before they reverse. Something very similar to what you see over here, where you get these big down days where everybody piles into stocks and gets super bullish on some type of news that comes out. And then of course it's usually the reversal sign, and we see bonds take off and stocks are selling off. So we're looking for one of these kind of big down days where everybody just decides to finally just say, I'm just going to bite the bullet, I'm piling into stocks, get me out of bonds. And that's what we're hoping for, is a big kind of drop down here. I think that would be a great opportunity for us to get long for a long-term play in bonds. Now, if we take a quick look at the cycle analysis for bonds, what we're looking at here, right now we've had bonds kind of top out, short-term cycle. We had an intermediate kind of cycle kind of had top here. Trend is overall down. The pink line here, that's starting to flatten out. So we're starting to lose our downward momentum. But you can see we've had these highs and then lows, highs and lows. And we're coming into a time here where we're seeing the gray line move down. We're going to probably see some selling. We've got the shorter term cycles moving down. You can see over here. So I think we're going to see equities probably continue to try and grind their way higher. They may not go higher, but people are going to become more and more bullish as long as price lingers up in these upper levels for stocks. People are going to continue to get more bullish. So even though I think stocks are struggling and most of that upside is done in this rally, I think we're going to continue to see investors pile in, move out of bonds. We're going to see bonds move down until we see these cycles kind of bottom out, and then I think we'll be heading our way higher. You can see here we've got a couple cycles moving up. So that's kind of the short-term outlook on bonds. Taking a look at the chart of gold, we are seeing gold trade slightly up this morning from where it was at. This is the GLD ETF, but overall, we've talked about this several times, that we've got this kind of steep trend line. We're starting to see volatility up here, and this is the sign that we could start to see the market roll over. We do have a couple significant pivot lows that in gold. This is the GLD, so there's a lot of price gaps because obviously gold trades 24/7. But once we start to break these levels, I think the ultimate level I'd like to see broken is down here. If it breaks that level, we're going to see real fear hit the market. But overall, I think there's a lot of downside all the way down to the 115 area. I think we could see it flush these two stops and kind of find some support in here. Ideally, the further down it goes, the better, because it'll be a great opportunity to get long, and the more it can shake out the longs before it turns up, the better it'll be later. So overall, we're kind of climbing this steep kind of cliff here. We're hanging. The market's been really choppy, testing these levels. We're seeing increased volatility. We're pulling back down. We're going to see it gap up. But overall, this is a little bit of a topping phase, real choppy. When it breaks this level here, we're going to see probably a pretty strong waterfall sell-off. And overall, we've been watching the cycle analysis, which updates every week. And we can see that starting to roll over. So take a look at the chart, the cycle analysis here for gold. Now these cycles don't actually tell you that they're going to fall to these cycle analyses are stuck in their own range. So it doesn't mean it's going to go down to 110. It's just saying there's downward biased until this time, but nothing to do with the price. So don't expect price to rally and follow the price of the pink line. What the key here is, if the pink line is trending up, that means there's going to be an upward bias. If it's trending down, there's going to be a downward bias. It's that straightforward. So you can see this cycle. We've been watching it, waiting for it to unfold for a long time. The cycle slowly matured over time. It was topping out somewhere over here, and it slowly continues to drag out. And this is a combination of multiple cycles in this one pink line. So all the cycles are now kind of evolving. But you can see we're on this downward slope over here, and I think we're going to come into some pretty good selling pressure. And this is, again, the key level I'd like to see broken is down here, the 113 on the GLD. And that, I think, would really flush out this price. There's a price gap right here. And this massive bar that I think where everybody piles in, that's usually the big bar that gets filled, and we'll see price come all the way down and flush out that bar. And then we start to see gold put in a bottom. So that's the bias. That gives you a feeling of where we're at. Now, with that being said, there's a lot of fear, a lot of things going on overseas that's helping hold the price of gold up. But again, we got the volatility. Everything is pointing to lower prices. The market is just topping out, and topping is a process. It's typically not an event. And bottoms, a lot more often we'll see bottoms become an event where you get a big spike low and you see a massive rally in stocks or whatever the asset class is. Bottoms are the highest emotion level in the market, and they're very sharp and they're very high volatility. So you get V-shaped bottoms. Tops are different. They're typically a topping formation. It's a constant struggle, and everybody has to slowly evolve and start to give up, and the market just eats away at their emotions, and then finally start to see a breakdown. So always think of tops that they drag out a lot longer than you anticipate. And bottoms typically bottom faster than you expect, but not always. You can see back here, we did see the cycle come all the way down, kind of held its ground, slowly started to show some signs of higher lows and higher highs, and then it broke out with this new uptrend and rallied. So we're starting to roll over here. We're starting to get a little bit of a topping phase. There's a lot of little different levels you could look at right through the heart of this consolidation. And here you could argue this could be a topping phase. You could argue that there's some type of head, shoulder, head, shoulder. And when it starts to break down this level, we can see that the height of this head here end up moving to the downside, bringing us down to around the 112, 113 area. And you could draw it different ways also. You could draw a rising neckline, which I prefer a rising neckline because it means you get these multiple pivot lows here, these candle lows that'll trigger stops. And of course, it also lengthens it gives you extra height for the downside target. And when you have a rising neckline, you usually get a better break to the downside. So overall, either way you draw it, it looks as though we are heading lower for gold. It's just a matter of when and what happens here as it unfolds. And we're going to be looking for a potential short play in gold to play this move down. All right, let's take a quick look at crude oil. This is the daily chart. We had this double bottom formation. We've been on a tear ever since. We did have our intermediate cycles bottoming, and we've been on this kind of move to the upside. And I've talked about right back over here how we're starting to get into a level where the stock market is going to start to struggle. We've got key pivot highs, which it struggled to break through. It kind of consolidated for a while. We've seen it pop out of that level. Now it's struggling through this consolidation here, this multi-week kind of trading range. So we're starting to get price gaps, prices jumping around. We're starting to get a little exhausted, and I feel as though we will see a little bit of a correction. But again, the bias for crude oil is still to the upside, and let me just show you the cycle analysis for that. So here is the cycle analysis for crude oil. You can see the key here information is we are seeing a little bit of a cluster kind of high, potential 3 cycles, or clusters of cycles topping out. We are trading right here on the session here. This is the previous session. This doesn't show today. Today we're trading, I'd have to take a look, but I think we're trading slightly higher today. Overall though, we've got a couple more days before we see these cycles kind of top out, and then I think we'll see crude oil continue to kind of struggle here. We might see it move up a little bit, but overall it's starting to struggle, and we could see it pull back and consolidate for a little while, and then I think we could see it start to move up. Going forward one more time for one last run, and then I think we're going to see it kind of top out for significant pullback, and this could be starting to form a basing pattern across here in the long run. So that's kind of where we're at. Still bullish on crude oil, but we are going to see cycles turn south here shortly, and we're going to see some weakness. And you know, this will be a time if we get some big pops and continued strength here, and you are long, you might want to start tightening stops or getting out of that play simply because we're going to start to have a multi-week soft spot in crude oil. And last but not least, let me just touch on this ETF. I talked about it a couple of days ago. It's a great gauge of where the broad stock markets are around the world. So GLW or GWL are all the stock markets more or less combined, minus the U.S. stock market. So it tells us where prices are trading on average for all the other stock markets. And you can see here it's pretty clear the overall trend is down. We've got a series of lower highs and lower lows working its way down. We had a double bottom here, and we've come up into this kind of bear market rally, just like what we've seen over and over again. Eventually you see these little bear market kind of rallies stall out, and eventually they kind of start to crack and break to the downside. So that's where we're at. Same type of thing. We had a significant bear market rally over here. This was actually kind of the test of long-term support, and the market held. This is kind of where the SP 500, in my opinion, the U.S. stock market is right now. It's somewhere right over in this area. Global markets have already broken below this significant pivot zone, broke below it, struggled to hold above it, and now it's clearly trading in bear markets. U.S. market large caps are still trading somewhere up here. They have yet to get into this bear market mode. But overall, we are just stuck in a bear market rally in general for stocks across the board around the world. And it's just a matter of time before this starts to top out, it becomes more volatile, and then eventually has its break, maybe a small pause, and then we just continue to head down to new lows. And bear markets typically last, we'll see 8 to 14 months to the downside. And the large caps have yet to really kind of start that. The small caps have in the U.S. market, but not the large caps. Anyways, that's it for today. Talk to you later. Bye-bye.